Welcome to Simple Investing Secrets. In today's video, we'll look at 8 stocks with high monthly dividends that you might want to add to your portfolio. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. Monthly dividend stocks offer investors the opportunity to generate recurring passive income. This is more in line with when many regular bills come due, so an investor can use dividend income to cover expenses. Because of this, monthly dividend stocks are great for retirees and other investors whose portfolios are their main source of income. With monthly dividend payments in mind, here's a closer look at the top monthly high-yield dividend stocks for 2023. That combination makes these stocks great for earning passive income. In 2022, nearly 50 stocks paid a monthly dividend. However, not all of them are worth an investor's consideration. Many didn't offer an above-average dividend yield. Others, on the other hand, seemed more likely to cut their dividends if the market conditions got worse. That narrows the options considerably. Let's take a closer look at each of these top 8 monthly dividend stocks. Each offers a much higher dividend yield than the average stock in the S&P 500, 1.3% as of January 31, 2022. Number 1. EPR Properties, ticker, EPR. EPR Properties is a real estate investment trust also known as a REIT. It has a lot of experience-based real estate, like movie theaters, places where you can eat and play, ski resorts, and gaming facilities. It makes sure that these properties are safe by signing triple net leases with the people who run the venues. This means that the tenants are responsible for the building's insurance, maintenance, and taxes. The COVID-19 pandemic had a significant impact on experiential real estate. Many of these places had to temporarily shut down or work with fewer people. That made it harder for them to pay rent. So in 2020, EPR Properties had to stop giving out its monthly dividend. However, with vaccines widely available, more people have the confidence to enjoy experiences outside the home again. Because of that, EPR's tenants are catching up on their rent. That allowed this REIT to resume its monthly dividend in July 2021. Even though EPR Properties already has a good yield, the company could make it even better as it grows and adds to its portfolio. It went into 2022 with a lot of cash on hand and a strong balance sheet. This gave it the money to buy more experiential real estate. Online streaming is causing problems for movie theaters, so EPR wants to buy more attractions that people can only see when they leave their homes. That could improve its dividend's long-term durability. 2. Agree Realty, ticker, ADC. Agree Realty is another REIT. These companies often make for good monthly dividend stocks because they generate recurring rental income. This REIT owns freestanding retail properties secured by triple net leases. It focuses on owning properties that are rented out to important retailers like grocery stores, home improvement stores, dollar stores, and drug stores, which are less likely to be affected by e-commerce or a recession. This strategy enables Agree Realty to generate steady rental income to support its dividend. In January 2021, Agree Realty switched from paying dividends every 3 months to paying them every month. It has an excellent dividend track record overall. This REIT has increased its dividend at a 5.5% compound annual rate over the past decade. That upward trend should continue as the company keeps expanding its portfolio. In 2021, the retail REIT bought a record $1.4 billion worth of properties, which increased its rental income and its ability to pay dividends. Agree Realty has a strong balance sheet to help finance its continued expansion. So, it planned to buy another $1.1 billion to $1.3 billion worth of properties in 2022 to keep dividend growth going. Number 3. Gladstone Commercial Corporation, ticker, GOOD. Gladstone Commercial is a diversified REIT. It focuses on owning net leased office and industrial properties in the U.S., each representing 48% of its portfolio, along with some retail and medical office buildings. This REIT also concentrates on secondary markets because they offer higher investment yields. This strategy enables Gladstone to generate a very stable income, which has enabled it to pay a consistent dividend. The REIT has paid more than 200 consecutive monthly dividends either at or above the prior month's level. It offers a high yield with modest growth. Over the years, Gladstone Commercial has added more and more office and industrial buildings to its portfolio. It went into 2022 with enough money and good finances to pay its monthly dividend and keep growing its portfolio. Number 4. LTC Properties, ticker, LTC. LTC Properties is a healthcare REIT. It mostly puts money into senior housing and skilled nursing properties that are backed by triple net leases, mortgage loans, and other investment structures that bring in cash. This strategy provides the REIT with a relatively steady income to support its monthly dividend. The pandemic hit the senior housing sector hard, impacting LTC Properties tenants. Several struggled to pay rent, which led some to file for bankruptcy. However, this REIT used its financial strength to weather the storm and offset some of the lost income with new investments. That's allowed it to maintain its monthly dividend. As the pandemic ends, the market should get better, so LTC Properties rental income should go up in 2023. Add in its recent investments, and this REIT's high-yielding monthly dividend seems sustainable. Number 5. Pembina Pipeline, ticker, PBA. Pembina Pipeline is a Canadian energy infrastructure company. It operates pipelines, processing plants, storage terminals, and export facilities. Most of the time, the company rents out its assets to other energy companies under long-term contracts with fixed rates. These agreements enable Pembina to generate a steady cash flow. Pembina has a good history of paying dividends because it has steadily raised the amount it pays out over time. It should be able to keep increasing its dividends as it finishes more projects to expand its energy infrastructure. Pembina has a large backlog of projects that have already been secured, and it also has a number of other projects in the works that will fuel future dividend growth. Pembina is still working to get people to stop using fossil fuels, and they are also investing in projects with less carbon. It's working with another Canadian energy infrastructure company on a carbon dioxide transportation and sequestration system to go along with its wind energy assets. These moves into cleaner alternatives should help fuel continued dividend growth in the coming years. Number 6. Realty Income, ticker, O. When it comes to monthly dividend stocks, Realty Income is the clear leader. It bills itself as the monthly dividend company. It has paid more than 600 consecutive monthly dividends as of early 2022. Also, since its first initial public offering in 1994, Realty Income has raised its dividend more than 100 times, at an average rate of 4.5% per year. That gives this REIT more than 25 years of dividend increases, qualifying it as a dividend aristocrat. Realty Income should continue to give investors a steady stream of monthly income that grows over time. It acquired fellow REIT VREIT in 2022. In addition, it bought roughly $6 billion of properties in smaller deals. This acquisition spree will help boost its cash flow per share by more than 9% in 2023. Realty Income has a lot of room to expand. The company estimates that the global market opportunity for the single-tenant net lease real estate it targets is $12 trillion. It has a strong balance sheet, even after buying properties last year, which means it can keep buying more. Because of that, Realty Income should be able to keep expanding its portfolio in 2022 to support continued dividend growth. Number 7. SL Green, ticker, SLG. SL Green is another REIT and the largest office landlord in New York City. While the city's office sector has faced some pandemic-related challenges, SL Green has held up relatively well. That's due in large part to its focus on owning some of the highest quality office properties in the city. This is good for this REIT because the city's office market is getting better and tenants are putting more effort into finding good space for their employees. This office REIT exceeded its leasing target in 2021 and expects to sign even more leases in 2022. The demand shows that companies expect to return to their Big Apple offices in the future. Meanwhile, office buildings remain highly sought after by institutional investors such as pension funds because they generate predictable income. That has allowed SL Green to sell select properties at attractive prices. It used that cash to repay debt, repurchase stock, fund new developments, and make acquisitions. These factors have also enabled this REIT to continue paying a growing dividend. In 2021, it notched its 11th consecutive dividend increase, making it a dividend achiever. With market conditions on the upswing and new developments paying off, SL Green should be able to continue expanding its dividend in the future. Number 8. Stag Industrial, ticker, STAG. Stag Industrial is another REIT with a monthly dividend. It focuses on owning industrial real estate such as warehouses and light industrial facilities. These properties are in high demand. The pandemic accelerated e-commerce adoption and increased manufacturing in the US to combat supply chain issues. This has kept occupancy rates high and pushed up rental rates, which has helped Stag get steadily more money from rent. Stag has been able to boost its dividend over the years. A big growth driver has been the REIT's ability to consistently expand its portfolio. Stag has added more than 400 properties to its portfolio since its IPO a decade ago, increasing its portfolio to more than 500 buildings. This industrial REIT expects that steady expansion to continue. It's targeting $1.2 billion of property purchases each year. When you add that to the increasing rent from its existing properties, Stag should be able to keep raising its monthly dividend. This concludes our list of the 8 high-yield monthly dividend stocks to buy now. As always, it is essential to do your due diligence before committing your hard-earned cash to buy stocks or invest in the market. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.